उसकी नैना से मुलाकात शुरू हुई, लेकिन अभी तक विक्रांत की तूफान शब्द का सही सही मतलब समझ नहीं आया।
Hello guys, can you all hear me?
Yes.
And can you all see me?
Yes.
Okay, awesome. So hi guys, welcome to this session. Kind request to all of you to please make sure that I'm muted so that there's no disturbance. All right, and I hope you guys will enjoy the session. So to get the most out of the session, all you have to do is very simple. Just keep a book or some form of notes next to you, because we are going to look at three of the most important indicators when it comes to analyzing price action for a stock. All right. So let me just share my screen. Yeah, can you all see my screen?
Yes.
Cool. So now let me start by first explaining this entire this website to you. Okay, so this website is called tradingview.com. All right, now on this website you can put up to 4 indicators. Beyond that you would need a premium. All right, now let us come down to how we add the indicators. Let me just remove them for now from the charts. I'm going to need your help, okay, once I teach you guys, so pay attention, because y'all are going to tell me what happens next. Okay, so how do you add indicators? Is very simple. Go to indicators, all right, and we're looking at three, that is moving average, convergence, divergence, relative strength index, and EMA, exponential moving average. Okay, now change the exponential moving average to 200. So you can see this blue line, that's the exponential moving average. So for today, what the whole purpose of this event is to understand how we can, is to understand how we can analyze price action or forecast the price of a stock only based on technical analysis and using just these three indicators. All right. So let me start by first explaining how these indicators work for you guys. Okay. So how it works. Number one is, let us look at the EMA. Okay, so the EMA is what we call, what we call as support for a stock. So let me give you an example to support my statement. What is the meaning of support? See, when let us put the scenario where let's say you're walking in a park, okay, and there's a stone, and you happen to trip over that stone. Now, what happens is, how do you prevent yourself from falling? Y'all can use the chat or unmute yourself. How do you prevent yourself from falling? What do you need?
Support.
Exactly. So basically, you need some form of support to stop you from falling, right? Similarly, for the stocks, it's the same thing. So a stock requires some form of support in order to prevent its fall, right? So this blue line, which is the EMA, acts as a form of support. So can you see over here, for example, right? See this area, how the EMA has supported the fall of the stock. Right now, it may not always be the case. There may be time that it falls below the EMA also. Like for instance here, right? So can you see these two places, like here and here? The stock fell below the EMA, right? But majority of the times it supports the fall of the EMA supports the fall of a stock. So can you see here also, for example? So that is the whole purpose of the EMA. Okay, now coming to the second one, that is the MACD, the moving average convergence divergence. Now the moving average convergence divergence, what does it tell you? It simply tells you who's in control. Okay, so can you guys tell me who do you, someone's mic is, yeah. So can you guys tell me, okay, in the stock market, which are the two kinds of players that are in the market?
Buyers and sellers.
Exactly, correct. And is there, are you aware of another name that we use to identify these buyers and sellers?
Bulls and bears.
Exactly. So basically, we have the bulls and the bears. So the bulls are people who, anyone?
Push the market
Buys.
upward.
Correct. Basically, the bulls are people who push the market up. What about the bears?
They push the market down.
Precisely. So what is the logic behind it? The logic is simple. You have to look at the bull and the bear when they go to attack some other animal or a person. How does a bull attack? The bull usually charges upwards, right, with its horns, whereas a bear, it pounces on the person, so it falls down, whereas the bull goes up. That is the whole logic behind bulls and bears. So remember, the bulls are the people who drive the market up, the bears are the people who push the market down. Now, coming to the MACD, how do we understand it? Yeah. Okay, so how do we understand it is simple. Okay, so can you see this blue and orange line? When the blue line crosses the orange line on the way up, right? And can you see this green bar starting to form? That tells you that the bulls are in control. The bulls have entered the game and they are in control. Whereas when the blue line crosses the orange line on the way down and these red bars start forming, it tells you that the bears are in control. Okay, so basically, green is the bulls, the people who drive the market up. Red is the people who push the market down. Now, another thing you can understand from the MACD is, can you see these bars turning light green and smaller? That tells you that the bulls are weakening. For the bears, it's the same thing. So when you see these bars getting lighter and becoming smaller, it's telling you that the bears are weakening and the bulls are most likely to come in. But again, it's not always the case. So for example, here, can you see how the bears came back into control? So it's very important to look at the EMA, MACD, and all of these things together to judge where the price could be headed. All right. Now coming to the last one is the RSI. Okay, so the RSI is what? The RSI simply measures the strength of a stock, right? So now, what is the sort of the limit is simple. If it's above this dotted line, okay, so this dotted line is 50. So if it's above the dotted line, it tells you that the stock has gained strength and it's pretty strong. If it's below that, it means the stock is relatively weak. Now, why is this important? Let me show you with the help of a scenario.
Can you repeat the RSI?
Sorry.
Please repeat RSI. What's RSI?
Yeah, sure. So basically, the RSI measures the strength of a stock. All right. So you look at this dotted line. If it's above this dotted line, means the stock is strong. If it's below the dotted line, that means the stock has weakened. All right. So that's simply what the RSI tells you. The full form is Relative Strength Index. It tells you about the measure of the strength of a stock in relation to the market. All right. Now coming to a scenario as to why the RSI matters is you can look at this crash, for example. Now, why the RSI matters is because when the stock is weak, right, the chances of it breaking this support is very high. Okay, so can you see here, for instance, what had happened? The RSI had gone below this 50 mark and it was weakening. And can you see how the stock fell below the support? It broke the support. The support was not good enough to hold it. Whereas when you see here, you'll mostly see the stock fluctuate around 50 or above 50, right? And that's when you see the stock, managing to take support of the blue line. Let us look at maybe another scenario. Yeah, so can you see this point as well? Can you see how the stock has mainly fluctuated around the 50 mark, right? And how it has taken support. So this is basically how this works. All right. Now I'm going to need your help to help me judge the direction of price action. So what I'm going to do is I'm going to be picking random stocks. All right. And someone's mic is, let's mute them. Okay. Yeah. So so what I'm going to do is I'm going to pick random stocks. All right. And you're going to tell me in which direction you feel the price is going to move. And what we're going to do is we're going to back test this entire thing. All right. All the three indicators. So let me start by picking the first stock. Let me take HDFC Bank maybe. So yeah, let me just present my screen 1 second. Okay. Just give me 1 second. Okay, so I need you guys to tell me where you think the stock is headed. All right, so y'all can use the chat, or you can use, or if you want, you can unmute yourself. Just that maybe if you use the chat, it'll be easier so that many people do not unmute at the same time. But yeah, so tell me when you look at it now. All right, so at the current position, do you think the stock is going to go up, or do you think it's going to go down?
Up.
Up,
Okay.
up.
Okay, so let's make it more fun. Let's do one thing. So what I'll do is use the chat and place a vote. Either say up if you think it's going to go up, say down if it's going to go down. All right, so I've kept the chat open in front of me. Okay, so let me know about this stock. Sideways. Okay, up. Fine, let us observe. I'm going to play it. Okay, so this has been the next closing. So now tell me, what do you think it's going to look like? Is it going to go down? Is it going to go up? Down. Okay. Anyone else? Okay.
But RSI is good. Strengthening.
Over here you're saying it's falling, right? It's weakened at the moment. So basically,
But yellow line is above the purple line.
correct.
Is
No, but
and it's above 50.
yeah, it needs to be above 50. Don't look at the yellow line. Okay, don't worry about this yellow line. Remember that this metric, it has to be above 50 to indicate strength. If it's below 50 means it's weak. All right, so don't get confused over there.
It has broken a trend line.
Okay, let's see how that plays out. Let me remove this. Okay. Okay, so you guys seem to be right so far. Oh, but there's now something different happening. So now what do you think is going to happen? Look at the RSI, look at the MACD.
There's a lighter line in MACD.
Exactly, correct.
It might fall.
Okay, let's see what happens. Okay, now can you see this point? Like this point?
Bears are getting weak.
Yeah, exactly. That is one thing. There's another thing that you can observe. What else can you see in this? What you said is right. The bears are getting weak, but there are like two more things that you can see which can give you a sign that there's a possible turnaround. What do you think that is? Anyone?
May I ask something? That
Yeah,
purple
sure.
line is crossing the yellow line. What is?
Right. So again, don't worry about the yellow line. Just look at the purple line. Okay, so don't stress about the yellow line. All right. So if I were to judge, all right, the thing that you can see here is, number one, the bears are weakening. Number two, the blue line seems to be on the verge of crossing orange, which is a sign of bulls taking control, possibly taking control. We'll have to see how it plays out. And the next thing is the RSI is starting to rise. That means the strength is building up. Okay. So let us see how that plays out. So can you see this? See what's happening. Have you seen? You saw this? So did you see like how it played out? Right? So it came here, it turned, you got the sign of turnaround, bulls to control, RSI began rising, right? And look at this. There you go. So now you've got a sign where the RSI is turned around. The bulls are still in control, but are seeing a red candle, right? Now let us see till date, if you followed just these three things, how that would play out, right? So if you had to buy here when this turnaround was starting to happen, you can see, can you see the kind of return you'd make? Okay, I'll address your questions in a minute. Okay, just give me. Okay, so let me just address the questions in the chat. Okay, a better way to analyze price action would be using a leading indicator like ADX along with RSI, since EMA, RSI, and MACD analyze almost the same thing. All of them are lagging indicators. You are partially correct, but personally speaking, like when I was testing these, these indicators, I realized that the ADX only tells you the direction in which the price action is headed, but it wouldn't really help you like pick a company based on what could possibly play out. But if you see here, like now that we back tested, you'd realize that when the MACD was turning and beginning to turn and the RSI was beginning to rise, we already got our sign. So the fact of the matter is that it's very important to understand when you need to buy, when you need to sell. All right. Coming to the next question. Guys, y'all can hear me clearly, right? Or like, am I breaking or something?
You're clear.
Voice is clear.
Clear, right? Okay, so Chinmay, I think your net might be a bit weak or something. But yeah, coming to, okay, why to use indicator if you are saying price action? Indicators basically help you judge, indicators help you forecast price action. That's the whole reason why we use indicators. Okay, because see, let me give you a scenario. Okay, let me give you a simple scenario where we don't use indicators. All right, so let me remove the indicators. See, now looking at this, tell me something. How would you judge in which direction the price could probably go to? Right, so that is the whole reason why indicators are there, is because indicators help us forecast what could possibly happen in the future. When we just look at the candles like this, there is no way for us to possibly tell in which direction it could go to, right? So that is precisely why traders use a variety of indicators to basically help them like come to conclusions as to how stuff could move in the future. Let me just add them again.
I have a query. The
Yeah,
candles
sure.
have size too.
Sorry.
We can judge from the size of the candles too. Maybe.
I didn't get you exactly. What is your point?
The size of the candles.
Yeah.
If the size of the candles are going smaller,
Okay.
we can guess out the bulls and bears.
You're
Where is
saying you're saying these candles.
yes, these candles.
Okay. So okay, like how would you do that?
I don't know exactly, but I watched a short YouTube video stating that.
Oh, I'm not. No, but
I don't know exactly how it works, but it works.
see, the thing is
Sir,
the
it
thing
has
is
given peace recovery.
the thing is the size of the candle would be very hard to, it would be very hard to forecast, because the size of the candle depends on the price action of the day, how many traders have bought and sold for the day. So the price the size of the candle depends on that, right? So if you see here, for example, the size of the candles are very small, but that would not give you an indication that the bulls or bears are in control. So that's the whole purpose why we use multiple indicators, is to judge, is rather to forecast in the future what happens. See, now what you're saying, if I rely on just candles will be forming, it's not telling me in advance what's going to happen, right? So if I go back to, let us say, this position, right? If I go back to somewhere here, see, if you see this, like how would I know what is going to happen next? Imagine these indicators were not there. How would I judge what's going to happen next? The size of the candle does not help me out. Whereas when I see here, when I look at the MACD weakening, the RSI weak, things like this, then the support close by, this would help me forecast what could possibly happen in the future. All right. So I hope that sort of gives you some clarity on that part of it.
Sir, but indicators lag.
Yeah, but there are like there are different types of indicators. So it honestly depends on how you look, how you would view an indicator. Like for example, if we went back here, see, you will have to understand which are lagging indicators and which are not. Now, if you say MACD is a lagging indicator, it is a lagging indicator, but you have to understand what is the situation here. So let me explain a simple thing that I use to help me decide in advance what's going to happen. So let me go back let me go back to this scenario that we were at. I'll help you judge this part. I'll tell you what I do. Okay, so let me just play this out. Okay, so you can see this this phenomenon happening, right? So can you see this part? Now, what you're saying is basically that if I followed only this, I would have missed out on this much, right? You're right there. What you're saying is right. You would have missed out on this much.
See a falling wedge.
You can see a
Falling wedge.
yeah, that's also true. Yes, but see, let me explain something that a thought process that I follow is that when you see the MACD about to turn, you know that it's comfortable to enter, right? You don't have to wait for it to confirmatory turn, right? You don't need a crossover to decide. Like, see, and what's very important to understand here is you need to look at which stock you're looking at. Because see, when you look at a good stock, you know that it will rise because people have confidence in that company, and these companies declare good results, they have good growth, they have good fundamentals. So you know that you can place your confidence in these companies, which is why you wouldn't really need a confirmatory like in the form of a crossover. All right. Well, the minute you see a turnaround, you see RSI starting to rise, you see this green starting to form, you're confident that, okay, this is a good company, people are confident, the stock will turn. So in that sense, you all might have seen on Instagram and social media of this quote, right, where it says it's very important to understand when to break the rules. So that is precisely what it means. It doesn't mean that you take all of the rules and you just break them and you make money out of it. No, there has to be a logical reasoning behind when you decide to break a rule. So when you see a situation like this, you know that there's a logical reasoning behind it. Now, if I take another company, let me take a company which is not that strong or not that great a company, like Confidence Petroleum, for example. So what happens with this company is you're not really confident as to what this company would look like tomorrow, whether it would survive also in the market. So in such a scenario, you would want to wait for a crossover to be sure that that you would not lose money in this company. Whereas when you look at a good company, so if I take another good company, let me say Pidilite Industries, for example. Can you see this situation? Right, so see this, you don't have to even wait for a crossover. See, the stock fell, and you know that it's at a good level, it's at a level that people are confident that it will go up from here. So the minute you see a turnaround starting to happen, you don't have to wait for a crossover, you can enter. So you would have got entry at this green candle itself. You wouldn't have to wait for like this level. You would have gotten to this, you would have got the benefit of this rise. So I hope like you're getting the gist of what I'm trying to say. Okay, let me just check out some other questions. So again, guys, like I'm leaving it free to you guys to ask any questions that I'll want. I'll be more than happy to clear it out. Okay. Okay, just give me a second. Okay, so addressing Yash, yeah, Yash, frankly speaking, I use about 16 to 17 indicators at a time. But like these are the ones I keep on my main panel. So what you're saying is right. There are like multiple indicators that do help increase your probabilities completely. But again, like for today's session, we're just sticking to 3. Now, if you guys do want to explore more indicators with us, then make sure to join the finance club, because every Friday at 7:30 p.m. we have different sessions where we learn about more indicators, we learn about fundamentals and things like that. So you guys can I encourage you guys to join so that you guys get the benefit of understanding other indicators as well. Okay, so then at the end of the day, of course, it only depends on what indicators you want to put together to form your strategy. Okay, that is like what the entire thing is all about. Okay, is it true that in the market history tends to repeat? Yeah, I would say so, that history does tend to repeat. However, there are a few things that may change from time to time. Like, I'll give you a simple example. Is that when we look historically in the past, every time there was a market crash, the market would rise, but at a very slow rate, right? But this year, what happened is the market crashed tremendously, like 18-20%, but it shot up within a year's time. It recovered, not only recovered, but it gave a tremendous amount of profit over and above that. So the question is, what has changed? You have to always get down to the root of what has changed. And what has changed is the COVID pandemic forced businesses to go into lockdowns. So what happened is a lot of employees were sitting at home and they had a lot of more time to spare. Over and above that, people were not going for vacations, we're not going out to restaurants, we're not going out for to clubs and things like that. So they were saving a lot of money. So what happened is people had a lot of money saved, people had a lot of time, and people didn't have work. So what happened as a result is the only thing that remains open, even if the whole world is coming apart, is the stock market. All right. So what happened is people took the benefit of these underlying factors and began putting their money into the market because the market was down. People had a higher amount of savings, and over and above that, people were at home. So people began pumping money into the markets in order to benefit as much as they could from it. And right enough, that is what pumped the market and brought the market up to that level. Someone's mic is okay. Yeah. So yeah, I hope that clears your doubt as well. Okay, and let me just go to Mohammed. I didn't get a question. Order block in the sense, could you please elaborate? Are you referring to stop loss? So again, coming to your question, if we give 1 year to understand price action, then we can predict direction without using indicator. Okay, so I'll give you an example, and then you'll understand what I'm trying to say. Let me take which company can I take to give you an example? I think Apollo tires may be relevant. Okay, so let us look at price action, right? Now in such a company, so if you see here, that's 24th March to about what, 17 December. So here this is pretty predictable, right? Like you can tell, okay, at a certain level it's going to go up, certain level it's going to fall after that. Absolutely. But now look at this part. So tell me now here, okay, so let us look at the 1 year before this. So can you see the year before this, how it has been, right, for the company? Now tell me, going forward, how would you predict? How would you predict if you didn't have indicators? So if you see this, what is this telling you? It's telling you that at this level, so the company was forming lower lows, right? Now here the market crashed. Would you have ever been able to see this? If you just followed that, you would have probably been a buyer, like somewhere here, I guess, thinking that the market would go up. But can you see what happened after that? See what happened to the stock. And can you see beyond that also what happened? It just kept rising. There was no predictive volatility. Like for example, in this scenario, it's very predictive. You can tell at a certain level it's going to go up, certain level it's going to fall. But here you couldn't say the same, right? There was no way to judge exactly how it would look. And like I hope that sort of brings some light onto your onto your doubt. Okay. I heard about swing trade. Can you please little brief on that? Okay, sure. So swing trade is basically like where you buy and you hold for a couple of days or maybe a couple of weeks and you sell beyond that point. Okay, so that is like basically what swing trade is all about. So for example, I'll give you a simple example is let us say that you buy here, okay, and you sell somewhere here. So if you if you want to understand date, you can go here. Okay, go to date range. So can you see like it takes you like a good sort of 54 days or so to get this gain. So like that is basically what swing trade is. So what is intraday? Intraday is you buy in the morning, you sell by afternoon. Intraday is what is basically swing trade is intraday. It's you're buying today, you're holding it for a couple of days, couple of weeks, maybe a couple of months also, and you're selling it. Then when it falls down again you buy, again you sell after a couple of days. That is basically what swing trade is all about. All right, so I hope that clears your doubt as well. So any other questions from anyone?
The blue line in EMA, what is it for?
The blue line in EMA, what is it for, you're saying?
Yes, yes.
Okay, so the blue line is simply acts as a support for the stock. All right, so every time the stock touches the blue line, it tends to support a fall. Now, if a stock is below the blue line, a crossover gives investors confidence that it is now in a good territory for trading, because every time it falls after that, it would usually take support unless a situation forces it to collapse. All right, so that is like what the EMA is all about.
So at what time we should expect that it would be good or bad?
I didn't get a question. Could you please repeat?
At what time we will know that blue line is rising or decreasing?
At what time you're saying?
Yes, yes. At what?
Okay, so for the timing, right, you have to pay attention to this. Okay, the time frame. So when it's on day, that means every day it will get updated. If you change this to let us say 30 minutes, that means every 30 minutes this blue line will get updated. Okay, so this is how you judge basically the time frame of it. So preferably for swing trading and things like that, you need to be on the daily chart.
And what's the use of that yellow line in RSI?
So the yellow line in RSI, in fact, was just been added like I think about 2 weeks back. I think on New Year's 1st of January they added this yellow line. So frankly speaking, I mean, if you speak to people below, I mean, people who have been trading for all these years, we ourselves don't know what this yellow line is indicating because it was never there. We used to look at the RSI in isolation and compare it to this dotted line. So I guess now that they've added it, we are still trying to figure out what this yellow line is trying to really indicate. But frankly speaking, like from the time they've added it, I haven't really seen it indicate anything really. So I really don't know. I myself don't know what this yellow line was added for. And it's only on TradingView. If you go to like other trading sites, they really don't have this yellow line at all. So I hope that clears your doubt.
But as an assumption, what's your assumption?
Assumption, I would say that I think what they are trying to indicate is every time the RSI crosses the yellow line, it's a good sign, and every time it crosses on the way down, it's a bad sign. I'm guessing that is what they're trying to indicate. But again, it's not, I don't know, it's not really accurate. Like, see, if I show you here, like, look at this part. If it crossed on the way up, if that is what they're trying to indicate, then we would look at it as a good sign, right? But see what has happened after that. It has fallen and the stock has collapsed. So we wouldn't have got it right. If we look at another example, maybe where, like, I don't know, maybe here. So if it crossed on the way up, we would have probably got some confidence, right, that it's going up and things like that. But can you see what happened after that? It's been very, like, I don't know, it's not given a very good good accuracy behind it. So frankly speaking, I myself am yet to figure out what this yellow line is to indicate. But if that is what they're trying to indicate, then it's not really bringing in any difference to a trader's sort of prediction.
Maybe it's like traffic light.
Sorry?
Maybe it's like traffic light. Yellow.
Yeah, probably. So it could be something like that. I honestly don't know, but I think that's usually why they put these lines is is to indicate that what the line is all about is when something crosses the line means it's good, when it crosses on the way down it's bad. That is what it's supposed to indicate, but frankly speaking, I haven't seen any proper indication from it yet. So yeah, any other questions from you guys? Any doubts? You all can ask me any question in general also. Okay, it doesn't really have to be like only on like based on charts and things like that. There's any advice you need or anything at all, if there's anything, any way I can help you out, please feel free to ask. I'm more than happy to help you. Okay, stop loss. I'd probably keep for how to buy less. Yeah, absolutely. So I probably keep this for like Finance Fridays because it would be really time consuming. So I would prefer to keep this for then, but I'm definitely noted down your questions, and we will take. I will make sure to address that for you. So any other questions you guys have? Any doubts or anything? So I can give you guys like some book recommendations that y'all could have a look at. One would be this. I'll put it in the chat actually so that you don't miss out. Okay, so like these are two books that really helped me when it comes to developing strategies and things like that. Okay, one is Trading Like a Stock Market Wizard, and the second one is Technical Analysis by Martin Pring. So we'll be looking at a lot of more indicators as time progresses. Okay, so don't stress about that. Make sure to attend Finance Fridays, and I hope you guys are on Discord because we have some really fun and interesting stuff going on our financing crypto channel. So like make sure to have a look at it at the end of the day probably, or at the start of your day, because we really have some really amazing stuff that's going on there. So Saurabh, I don't do intraday, nor do I touch futures and options. I do swing trading. Again, futures and options and intraday can be very rewarding if you know how to do it properly, but it's highly risky. And I like from the times I've tried intraday and things like that, I found better profitability in swing trading rather than intraday. So that's the reason why like I sort of always took to swing trading. Futures and options is something I'm still exploring myself. It's again very risky, very hard to forecast, and very complex in that sense. So it could really take a lot of time to learn how that works.
Which broker do you use?
So I have two brokers. I keep one portfolio for long term and one for trading. So my trading I use Zerodha, and for long term I use IIFL. For which people this profession is good? Very good question, Mihir. I would say this profession is good for everybody. Okay, so see, if we understand today why are we as individuals working? The reason why we work hard is because we want financial freedom, right? Now, how do you achieve financial freedom? One thing is, okay, you should start your own business and things like that, but what are you doing when you start your own business, when you're running a profession? You're actually working, right? You're putting in the hours. When can you say you're financially free? You can say you're financially free when money works for you and when you are not working for money. Now, what do I mean by that is very simple. Let us say your goal is to make 10,000 rupees. Okay. Now, when you are working for money, you would be going out searching for jobs and finding ways to make 10,000 rupees by working. But when is money working for you? Money is working for you when, for example, you take 1 lakh, you invest it, okay, and you earn 10% return every year. So that 10,000 rupees is coming in without you doing anything, right? You just invested your money. So that is what money working for you is all about. And which is why I say that, and I firmly believe that regardless of which sector or career you're a part of, you should be investing in the stock markets because it will contribute to your future and your financial freedom. Second thing you can keep in mind is stocks beat inflation. Okay, so what is inflation? Inflation is, the price of your goods and services rising every year, right? Stocks beat that inflation rate. So it helps you meet up to all the price rises in the economy without having any tension. That is another reason why I recommend people to get into stock markets, regardless of which career or what a profession you're working for. So I hope that answers your question. What are your views on small case? I think, I think small cases are pretty good for people who are starting off, especially because, yeah, y'all can share chart on Discord. Okay, it's not a problem. Like, feel free to do so. We have a live market segment. You can just go under that and you can share a chart. Feel free to. Y'all can also ask me if y'all ever want me to analyze a company, anything for y'all. Just go on the live markets and type analyze and the name of your company, and I will within 24 hours I'll give you your a brief on what I think about the company. Okay. What are your views on small case? Yeah, so coming back to this, I think for beginners, small case is a really good is a really good option because they are based on certain themes. And if you're someone like, for example, if you want to invest in large caps, you can put there a large cap, small. I mean, sorry, you get these large small cases, right, where you have all the big companies that are there under that. So you can meet up to certain themes that you want to. Like, for example, if you want to invest in green energy, you can go for a green energy small case and you'll get all companies that are related to green energy. So that way you get the benefit of all of these things, right? So that is like precisely why I believe that for a beginner, a small case is really good. Yeah, so Shravan, the recording will be posted and it'll be shared like on YouTube probably. So you can have a look on YouTube. The recording of this entire thing will be there. Yeah. So guys, the recording will be there. Don't worry about it. It'll be up and it'll be up on YouTube most probably. So don't worry about it. Yeah. So Saurabh, what you're saying is right. In fact, guys, to be very honest with you, you can judge price action based on only technical analysis. But if you want to increase your probabilities of making money, it's very important to also look at fundamental analysis. Okay, so like that's very important. So you need to have a combination of both of those things. Puneet, unfortunately, since it's a public platform, I will not really be able to tell you sort of recommend companies. So I'm really sorry about that. I really wish I could actually. Yeah, my full name. Yeah, sure. Like, why not? I'll put my full name in the chat. Okay. Coming to the next question. How can an absolute beginner understand more about intraday? Can you suggest some websites or YouTube channels? Frankly speaking, let me be very point blank and honest with you guys because I don't want you guys to mess up in the markets. But frankly speaking, I don't really recommend YouTube channels for learning. I would rather instead recommend you read books because what happens on YouTube channels, the focus is not on providing content to you guys. It's more on getting views and increasing the number of views and things like that. So you would not really find valuable information that you would get in books otherwise. So frankly speaking, all of my knowledge is from, I've never watched a YouTube channel for learning stock markets in my life till date. I've only read tons of books. So that is like what has helped me out. So I frankly, I would recommend you read a lot of books because that will actually make a difference to your trading career. What are various EV companies that are listed? So EV companies, yeah, like if you look at Tata Motors, for example, it's a EV company. Like they manufacture electric vehicles, right? Your Tata Nexon EV and you know all of those cars. You also have Hero MotoCorp today, who has bought a huge amount of stake in Ather Energy, right? So Ather electric scooters. So they are another option. And then you have all these TVS and Mahindra and all of these companies. Now basically everyone is running into the EV sector. Then you also have EV components, right? So you have like, for example, you have Tata Motors, for example, where they manufacture all the charging stations and things like that. So like these, there are various companies who manufacture the vehicles, and there are various companies who manufacture the components of the vehicles as well. So it just depends on where you would want to, enter. Yeah, so again, guys, you don't have to really be traders to make money in the market. You all can be investors as well. So every month, if you put a portion of your salary into the stock market, that is still something. It's not that you have to trade, you have to buy and sell tomorrow in order to make money. There's nothing like that. In fact, if you really want to see wealth creation, then investing is always better than trading. Trading just helps you give you some regular income, but it's not something that will help you create wealth in the long term because your money needs to compound, and the only way for it to compound is to stay invested. All right, so you don't have to worry. Like, frankly speaking, even I don't always trade. I put a significant amount of money in investing because I'm also working. So I really honestly don't have like, the stock markets is my profession, but I spend a lot of my time doing research on companies. So I may not have time to actually like sit in front of the screen and observe prices every second. So that's the whole deal of that part of it. How long have you been in this trading? Oh yeah. Okay, so sorry guys, I probably did not give you all an introduction, but yeah, my trading career, I started back in 2016, so approximately 5 years, and I've been working with I do equity research for a sub broker of IIFL, where where I basically do research on various companies and the opportunities present in front of them. So that is what I do in the market. So I do fundamental analysis, I do charts and sectoral analysis and all of these things. So yeah, that's just a small bit about me. So again, I would not really be able to tell you exactly where to put your money because it's not. I'm not I'm not a SEBI certified advisor. So on a public platform, I can't really share that information. Unfortunately, I'm really sorry about that. No, so that's the thing. According to me, I would have been more than happy to share if I could, but I actually I cannot mention it on a public platform, unfortunately, because it's illegal for me to do so. So yeah. So yeah, I guess there aren't any more. So what I would do is I will leave my contact number down. So if any of you ever have any more doubts, you all can always reach out to me. All right. So I've left my contact number. You all can just WhatsApp me anytime you want, and I'll be more than happy to guide you all or any advice that you guys need. But yeah, with that, I would like to conclude today's session. I hope you guys have got some good value and have enjoyed today's the final session of the finance week. I hope to see you guys for the sessions going forward. So yeah, see you guys. Take care. Thanks for attending today. Bye.
Yeah, thanks, Aman.
Sure thing. See you.